Hello, everyone, and thank you so much for joining us. We are very, very excited for today's webinar. If you are a real estate agent or a realtor, you're definitely going to enjoy this. You're going to get tons of value from this because we're going to be talking all about accounting for real estate agents. Now, I won't say bad things about real estate agents. I tend to always make fun of real estate agents and be like the glove compartment's full of receipts and the busyness and the craziness. And it's all just out of admiration and respect for the profession because let's just be honest with each other. Being a realtor, being a real estate agent is a very, very intense, fast-paced industry. And that's what you guys are good at. That's what realtors and real estate agents are great at. They're good at putting things together with what they got in order to get the deal across the finish line, and that's what you should be focusing on. That's what you're good at. But when it comes to accounting and bookkeeping, sometimes those things kind of get a little bit pushed to the side. Or maybe you're a new real estate agent and you're interested in all of this, but you haven't even taken any of this into consideration. That's why we're here today. That's why Finngo is hosting this. Steve Tsonev, my business partner, is going to be leading today's webinar and providing you guys with a ton of golden nuggets for you guys to add so that you can start building out better systems. And so without further delay, I'm going to pass things off to Steve. Thank you, Steve, for being here today and putting this on.
Thank you, Wayne, and thank you for helping me organize this and for being my co-host. I always love spending time with you because it really helps when we have concepts and ideas to chat around, because sometimes for me they're very easy, but for others not so much, and it's good to bounce those ideas with someone. Welcome to everyone, and thank you for joining us to this short webinar today. Whether you're new to real estate or you have a number of years of experience, you will know good bookkeeping and good tax strategy is very important for your success.
Yes.
As Wayne mentioned, many agents treat their bookkeeping a little bit as an afterthought. And especially during tax season, that can end up hurting you quite a bit. So if you're good with building habits year round, then you can take control over tax time and make it a lot easier compared to just kind of struggling and having it all kind of due at the same time. So I will start by giving a quick introduction. My name is Steve Tsonev, and I'm the co-founder and current managing partner at Finngo Bookkeeping and Tax. We're a team of professionals with extensive experience in various types of small businesses, but our niche and focus is real estate. We know a lot of the ins and outs around your industry as a realtor. We see all the different commission reports that normally come in. We understand the fluctuating cash flows, how you need to manage multiple properties, and understand that CRA rules are a little bit unique in your sphere and they keep changing all the time, like they do with all other industries as well. So our mission is to keep more of your money wherever possible and to navigate those complexities in this weird CRA space where you're kind of on the go all the time and you don't really have time to think about it. It's a bit of a more of a reactive thing that happens. So I've helped many realtors and real estate agents. I wouldn't say it's quite 100 yet, but it might be getting pretty close to that number. So having seen what you guys go through, I completely understand, and I want to find a way to support you, because it is a type of work where when you're getting started, you really need to put your focus on building up that client base, finding all those potential new home buyers, or like finding yourself within that industry and how to do that. And the back office stuff is really not top of mind. It's not something you need to be paying attention right from the beginning. But then if you haven't and you don't create that habit, it will end up making your work a little bit harder when the deadline comes.
Mm-hmm. Absolutely.
So that would be a quick introduction. Let's now move into kind of getting started into some of the key points that I wanted to bring today. And I'll start by saying that by no means we're going to cover everything accounting related for realtors. There's just so much. So I've focused it on basically three key areas that I think are important, and there's some cool things that you want to be aware of. And if you have more questions, or if you would like to discuss further your specific situation. In this slide here, the QR code is my link tree, which has all my social media and as well as my appointment booking calendar. So I would highly encourage you schedule a discovery call so that way we can discuss the unique things for you. So let's get started with the first item. I think this is a pretty big one. I think a lot of realtors care about it. They spend so much time in their vehicle. So vehicle expenses is really high on the list of things that I see within this industry. And there are certain things that I think could help you. Let's start by saying that when is vehicle expense eligible? So that would be all of your showings, all of your team meetings, if you need to go and arrange the staging or the inspection of the property, any networking events you attend to, all of these add up and they can create a significant amount of deductions for you. Most often, we have realtors come that do not have any type of mileage log or tracking. So if there's anything you're going to take away from today is going to be, let's find a way that you can track that mileage. I don't care if it's going to be a simple notebook that you get from the dollar store and you write in the trips that you do that are related to your business and how many kilometers you spent, or you can go as fancy as getting some app that is installed on your phone and it kind of tracks you in the background. In fact, I will give you a recommendation. There is a wonderful app called Mile IQ, Mile MILEIQ, and it is a free app which you can install on your phone and you can start tracking your mileage today. In the free version, they let you track up to 40 trips in the month, which could be, a good amount of trips. Maybe some newer realtors will be perfectly fine with having 40 trips tracked in the month. But if you kind of outgrow that and you need to move a next level up, it only costs $7.50 a month, and that gives you unlimited trips tracking basically. But the value you're going to get out of it is in the thousands of dollars. And I will give you an actual monetary figure that you can keep in mind so you can kind of understand what I'm talking about. With CRA, there are two methods for us to give you credit for the mileage that you've done. One of them is a complicated one, and we would need to add up all of your gas receipts, all of your repairs and maintenance, figure out how much you purchased the vehicle for, figure out if you're making any lease payments, what those lease payments are, how much was the interest for the vehicle, etc., etc. Then we would take the total number of kilometers you've driven for the business and the total number of kilometers you've driven for personal use, and we'll find the ratio, and we need to do certain calculations, but essentially we will discount the personal use out of all these expenses, and then we also need to monitor certain caps that CRA has. So that's the complicated method. It's not impossible. We can absolutely do it, but there is an easier one where we just take the number of kilometers that you have done for business, and CRA gives us a number that they call an allowance that is reasonable according to them. Every year changes a little bit. Currently, it's sitting at about 70 cents per kilometer, and 70 cents per kilometer is a pretty high number.
It's a lot.
There are some rules around that. There are 70 cents for the first 5,000 and 60 cents for the additional. But still, let's take a simple example of 70 cents per kilometer. On average, a realtor will drive almost 20,000 kilometers per year. So that is a lot of kilometers. If we can take 70 cents of that, that creates a really large deduction. It can be anywhere from $12,000 to $15,000. And that is a lot of money. You definitely want to be tracking that and have the backup to support it, because it is kind of a big number in your industry. It is very likely to be reviewed by CRA at some point in the future, and it's low-hanging fruit. They know that most people don't have a log. So it's an easy way for them to say, oh no, we're not going to give you permission to deduct that $15,000. And then they will tax you on that. It's not a good spot to be in. It's low-hanging fruit, like I said, so why not take advantage of it and make it easier? Wayne, how do you track your kilometers? I know you don't get out too much, but...
No, I get out quite a bit actually, more than I'd like to admit. But no, we track it through an app as well. I believe it's called Mile IQ. That's what it's called.
Okay.
We use that personally. It's fantastic. It's easy, super simple, and never
Yes,
had
that
issues.
it doesn't need to be complicated. It needs to be simple, and with technology, we can actually achieve that these days. You just install it on your phone, you set up your account, and in the background, it's going to track your trips. Then once every week or once every month at least, log in and tag them. This was a personal trip. This was a business one, personal business, etc. Like be honest, because it will actually show where you were. And once you're finished with that, then that's it. At the end of the year, you click export, and then you have your full year's worth of kilometers tracked. And then that makes our work a lot easier as tax professionals because we can give you the credit that you deserve. You already spend so much time in that vehicle and do so much work for your clients from inside there. So why not take advantage of it? I do have another pro tip around that. Actually, I'm just reading my notes here.
Hmm.
Possible to estimate how many trips you've done and how many kilometers you've spent. You can look at your calendar, you can look at the number of properties you sold, the various showings that you've done, and then backwards calculate how long it took you to drive in between. But it's not going to be as accurate, and it's going to forget those little things where you had to stop by the dollar store to purchase certain things that you needed for that showing, or by the store to purchase, cookies or something to bring for the showing. So all those things would probably be missed because as time goes by, we tend to forget. We have other things to focus on. But in addition to that, an estimate is not as good as an actual tracked log and record. And it is very likely that CRA might disallow an estimate or reduce it. If you're going to estimate, let's say 20,000 kilometers, they might say, oh, no, it was actually closer to 15 or maybe 10. And that is something you don't want to be in. So if there's something you can implement immediately, that is going to be start tracking your mileage. We often also get asked, should I purchase the vehicle in my personal name? Should I purchase it in my corporation's name? Should I get a lease? Should I actually buy it outright? And the answer is, if you're going with the kilometer allowance road, it doesn't really matter, because you could have a vehicle that's purchased and it costs you, I don't know, $5,000, like a very cheap, dingy car, or you could have a really fancy $150,000 vehicle. At the end of the day, it doesn't matter because we go by the number of kilometers and the reasonable allowance we're given. And it
Yeah.
makes the calculation a lot simpler. Now, if you buy a vehicle though in your corporate name, it makes it complex because for the personal portion, what we need to do is follow a certain formula, figure out what is your benefit for that, and then issue a T4 slip from the corporation to your personal name. And then you need to pay taxes on that benefit that you've received from the corporation. So, to be quite frank, most of the time we say just buy the vehicle in your personal name. You're probably going to get a better rate anyway for the insurance. Um, and the insurance as well as the interest rate on it, you might get a better deal. So honestly, just chase the deal. Find the cheapest vehicle that you can get out there and use that. Then multiply the number of kilometers. As simple as that.
Yeah, financing through a corporation can be a little bit difficult, especially if you're a newer agent and you haven't quite developed a steady track record of years
Absolutely.
worth of revenue in that business. So sometimes, yeah, it's a great point. I'm really glad that you said that as well, because a lot of people get stuck between the financing and the taxes and the most efficient way to go about doing it. So by you sharing that, that probably made things a lot easier for a lot of real estate agents.
I think one of the misconceptions is that when you have a corporation, you can claim more expenses in it. And the truth is, that's not necessarily the case. The simple rule is, as long as an expense is associated with you earning income somehow, that's an eligible expense. It doesn't matter if you paid it with your personal money, with your corporation, or any capacity. The importance is just make sure that it is somehow connected to you earning money. And if that's the case, it should be no problem at all.
Hmm.
Okay, wonderful. I think that covers this kind of big topic. I think a
Yeah.
lot of realtors who are starting up are really curious about what to do with their vehicle because it's something they spend a lot of time in. So let's move on to the next one, and that is going to be your home office expense. You know, having a dedicated spot in your home that you use for business, could be a spare bedroom, it could be your basement, could be your kitchen table, because sometimes we have smaller properties. There are realtors who may be listening to this who don't live in Alberta. Maybe they live in British Columbia, and they have a lot smaller properties there.
Hmm.
So unfortunately, extra room is not always easy to find, and you have to work from wherever is possible. But as long as we have a dedicated spot that we can measure and know, we could take a portion of all your home office expenses and claim them as part of your tax return. So that could include things like your property taxes, your utilities, your mortgage interest, any repairs and maintenance, insurance, basically anything associated with maintaining that property. It is as simple as us measuring what is the size of the office compared to the size of the entire property. And that gives
Hmm.
us a ratio. We then take that ratio and we use it as a deduction on your taxes. Now, a bit of a misconception. Sometimes clients ask me this, oh, but I'm only renting my property. And the truth is, it doesn't matter if you own or rent. We could then just use a portion of your rent towards the expense. So I think that it would be something that I want you to take away. It doesn't matter if you own or rent. Either case would be fine. We still want to measure that and incorporate it into your tax return.
That right there, I don't think I've ever heard anyone else ever say that ever on
Okay.
any
Yeah,
on any stage or any seminar or webinar. That right there is a big one. And again, it's you don't know what you don't know, and that's something that I think a lot of new real estate agents don't really know, is that
that's right.
you don't have to own your home in order to write it off. And also, there's another this misconception that everybody has to have an office. You know what I mean? You have to have a professional office. I need to be, it's very archaic in a way that people feel like you need to have an office in order to be a professional. You don't really, especially for the way the world is changing and the way that we're so mobile and we're so remote now. It seems like a waste of money to go and rent another space and write off that space when you could just use space that you already currently have and deduct the cost from there. Like, why would you go and rent another space and spend that money and then deduct that when you can just deduct the space that you're already using? And you're never going to go to that office anyways, because you're always on the go. You always are working on the next deal. You're on the
Exactly.
phone, right?
I was just going to say, put yourself in the shoes of a realtor. And oftentimes they're going to be bombarded with messages and phone calls in the evenings. Like that's when people are home and that's when they're browsing the MLS and they're like, oh, could you schedule a showing for this? Could you do that? Could you update my profile to include this new parameter, et cetera, et cetera?
Mhm.
So what do? They're going to go in their office and start working on that. They're not going to drive away to like some office that their brokerage is providing. Those offices are great and they're there for your education meetings or like whatever things they do throughout the weekday and regular business hours. But the reality is majority of the work for the realtor does not happen until weekends and afternoons because that's when people are available and it's top of mind. It's not a great type of work to be in, but I just want everyone to appreciate realtors for doing that for us because without them around doing that, then we wouldn't be able to find these deals that we care about or those homes that we call home now, basically.
Yeah.
So yeah, that absolutely. If you are using a dedicated space in your home, we can figure out a way to deduct that for you. Now, sometimes clients ask me, "What do I do if I'm only using my kitchen table?" And the answer is, we can still calculate it. It's going to be a smaller amount, but essentially we're discounting for the time that you're using it as well. So if it's not a closed off room that nothing else is in there, it would be more like we discount for the area, the surface area that it takes, as well as the time that you spend there. So let's
Yeah.
say you spend 4 hours in the week on that. So we will use that as our ratio. There are certain diagrams available by CRA. So if you have a weird setup or a scenario that doesn't quite fit, I showed my QR code earlier for appointment booking. I'll show it again at the end, but that would be a good thing to discuss because then we can actually create some type of plan and keep it on your file and have that as a backup if CRA ever asks to review or audit your home office expenses.
That's good. Smart.
One last thing about your home office expenses. It is something that it can easily be missed by tax professionals. We have it as part of our checklist to ask you for it as we start working on your tax return and preparing for it. However, it's not something that easily pops up when we do your bookkeeping. And the reason is all of these expenses you pay with your personal money in your personal account. They don't often hit your business account. And by the way, if you don't have a business account, you better set up one up right away. We want to separate your personal and business expenses whenever possible. But this is one unique scenario because we don't expect that we're going to pay all of our home office related stuff from the business account. It just doesn't happen. So it is a question that we ask once a year and we add it to your books once a year. We don't do that regularly on a monthly basis as we're preparing your books. And if somebody is relying just on the bookkeeping to prepare the tax return, it is possible to omit. So it is something that I want you to pay close attention to whenever you receive drafts or a review of your tax return and you do have a home office expense, double check and make sure that it's included in there.
Yeah.
Okay. Let's move on to the next one. That would be your office supplies. Office supplies is something that you kind of would know. Oh, yes, all my office supplies would be included. But let's kind of go over what those are. We have your binders, folders, printer cartridges, business cards. They can add up over time. But there are many things that realtors use office that are office related. It's going to be all different types of promotional material that you might print. I know a lot of realtors still print off those calendars with their face and contact information, and they put it in the mail and send it to their prospects from before
Mhm.
because they want to stay top of mind. Those would be good examples. Could be many different things, and I want you to remember those. Don't forget them because they are sometimes blended with your marketing materials, and then the just day-to-day use office stuff. So it is an area that you should be reviewing and make sure that nothing was omitted or ended up in the wrong spot. You can have a paper folder where you collect all of those receipts. Like I mentioned before, the Dollarama kind of, little trips that you go in and you buy little signs or another cool thing that I've seen some realtors do is there's this like kind of wooden stands that have an NFC embedded into it. And then when people arrive, they could just tap their phone and then get the contact information of the realtor, or it might be a form where you fill out some information, or it might take you to a Google review. Those are all really cool things that you just want to make sure they are included inside of this category here.
Are you giving
If you
marketing
have
advice now too?
maybe a little bit. I mean, I see so much, right?
Like,
So why not share that with
yeah,
the general population here?
yeah, absolutely.
It's a cool idea. I like
Yeah,
it. It's the truth is, if somebody just grabs your business card, they're probably going to put it somewhere and forget about it and lose it. So
yeah,
you want to take their information, and if you can do that through a form, why not? I think a trick that I've seen is they have the brochures for the property that they're doing an open house for. So when the person arrives, they tap their phone, they put in their email, and they get that email to them. So they have a digital copy now of the brochure, but the realtor has now collected their contact information. So it's a cool thing that I've seen around, and as we do the cost and the accounting for it, I think it's important that we incorporate all that with the expenses that you have. So again, very important, figure out a way of storing all of your expenses. Now that would be for across the board for everything, having a physical folder, maybe your wallet or your car armrest or something like that. That's okay. You just want to, on a regular frequency, take it out and process it. Don't leave it just there. Have a consistent spot where you're keeping everything, and let's get it actually processed. Then the secondary thing to office supplies and office expenses would be technology. So those would be computers, tablets, your phone. They are not very straightforward. We just don't take them dollar for dollar and claim them. They're more of a capital expenditure, something that you're going to use for a long time. I know a lot of people are going to say we change our phone every year. I
Mhm.
get it, but we still need to follow certain rules. So let that be on us. We can figure out what the rules are. I just want you to remember, keep the receipt. Whenever you go to the Apple store and get that new iPhone, or a new computer, please let us know. It might be something that does not hit your bookkeeping because you probably didn't use your business bank account for it. Maybe you use your personal card because you get points or extra warranty, something like that. Totally cool. But if we don't see it, we're not going to know about it. So make sure you don't forget to bring that up. Okay. I think that kind of covers this topic as well. It
Mhm.
is a pretty interesting topic.
There's so
Because
you could dive so deep into that. I mean,
absolutely.
one of these days, we should put together almost like a checklist of every possible deductible office supply and send it out to everybody.
That
That way,
was going to be
go through a checklist every year.
I feel it might be too complicated. Like
Really?
I also actually think CRA has something similar to that. I might actually go and look it up, because there are certain office supplies that CRA gives us a table if we can expense them in the current year or if we need to depreciate them over time. So
Okay.
that list might actually be pretty exhaustive. So I might find that for you and we can post that.
It might just be easier just to reach out to the team at Fingo and find out rather than you trying to figure it all out,
That's
right?
true.
Yeah.
Absolutely. We can help you out. And that would be an ongoing help, right? As you're dealing with something, you can send a quick message to our team and we'll help you out right in the moment.
Yeah.
Okay, let's now talk just a little bit about general bookkeeping advice. And because we had three topics that we covered, and we could go into a lot more detail for others as well, but those were the three we're focusing on today. So now let's just talk about a few general things. Accurate and consistent record keeping means you will not miss anything that's eligible. So think about your business as the most important part that you can do for yourself is keeping records. As long as you have those records, we can find a way to use it somehow. If we cannot, I would rather you have the record and we say we don't need to use it or it's not eligible or it doesn't work than the other way around where you don't have records and then we end up leaving money on the table. We already pay more than enough taxes. So if there is anything that we can do to minimize that, we should do it.
Yes, absolutely.
When you keep your books up to date, you'll understand your profits, you'll spot cash flow issues, and then you'll be better prepared for CRA audits. So, what I mean by that is a lot of times I would find people who don't pay attention to their bookkeeping until tax time comes. And essentially, that means you're dealing with it only for compliance purposes. So that's not necessarily in your benefit. When you're dealing with it last minute, you're stressed out and you're trying to rush things and do them quickly. So it doesn't necessarily give you that much of a benefit. It does check the box and the CRA taxes are filed, but do you actually understand how your business is doing? Is there any seasonality to it? Could we forecast some cash flow for you and figure out how are you going to be doing next summer or next winter? Because
Mhm.
there is seasonality in this industry. Maybe figuring out when is a good time to purchase certain things like a vehicle. That's pretty common for real estate agents. Now, sometimes you may want to add people to your team, and that would be more like the administrator. It's a very weird industry that you don't necessarily hire employees, but one way to grow and to expand is by offloading those admin work. So that could be something we can help you figure out as well. Having ongoing bookkeeping gives you the insight so you can make the decisions to grow that business. And I get it, when you're new and you're starting, it's probably not top of mind. But as you mature and you get deeper into that industry and you get more and more years behind your back, it's going to be quite important that you pay attention to that. You can invest into modern tools like cloud software. We have QuickBooks Online, which is the most popular, but there are other ones that are pretty beneficial as well. QuickBooks Online does come with its own mileage tracker built in, so then you don't need to have a separate one. But then there are other tools and ledger platforms out there that you could use, and that's perfectly fine as well. Many automated receipt captures. If, for example, you're on the Xero ecosystem, it comes automatically with a HubDoc subscription, and HubDoc is basically an app on your phone that you just take pictures of your receipts. It makes the tracking a lot easier. If you're in the QuickBooks Online ecosystem, most likely you'll be familiar with Dex receipts. Those two are industry gold standards. There are some other ones that are coming up right now, but they're not super tested. We are keeping an eye on them, but you're probably going to hear Dex or HubDoc for receipt captures. And then keeping up with your ongoing reconciliations, making sure that your banks stay connected to your ledgers and the information and the data is flowing in. It's really going to help minimize the amount of effort you need to put into preparing your books. And then tax time is going to feel like a breeze. I was just speaking to a client earlier today from a different industry, but they kept up with all of their accounting and bookkeeping, and their year end was in the month of September. In October, we were able to prepare all of their T2, which is the corporate tax return. So that gives them basically 5 months extra, which normally your tax time, like deadline, is 6 months after the year end. But because everything was so easy, basically within the next 30 days, we were ready. They had an idea on how much they owe. In fact, they had prepaid for it already, so there was nothing extra to pay. And they just knew that the cadence and the schedule we had given them was good enough, and they're going to maintain it. So those are the peace of mind feelings that I want to pass to all my realtors out there. Because sometimes when you hear the word tax, you get scared. We want to avoid that wherever possible.
So, Steve, like, let's go, because I'm always thinking of the newbie in the room, because that's normally the person that's the quietest, but also the one that's too afraid to put their hand up. So I always look at this through the lens of the newbie, the newer real estate agent, the newer realtor, who's just like, this all sounds really cool, but like, I don't know what that zero thing was you're talking about, or QBO or whatever. What is all that stuff? For someone who's looking for help, who's like, I don't understand this stuff. It's going way over my head, but I know I need to get it done. Like, what do you recommend for them? Is this like, if they wanted to reach out to you, to reach out to Finngo and be like, I just need some help getting this stuff set up. How would you go about guiding them on that?
Absolutely. I think the first step is going to be, and I'll bring up my QR code again in a little bit, scheduling that discovery call. Because the moment you schedule the discovery call, we add you into our system. We now know that you are someone who's interested on getting things in order. In the discovery call, we're going to talk about what are you having issues with? What is a roadblock that you're facing, and how can we help you? Some people are super eager and they want to do their own bookkeeping. No problem. We're going to accommodate that. But for some people, it's something that goes completely over their head and they don't know where to even start. We can help with that as well. So we have different pathways and different things we can help. Once we establish that, then we start looking into other things. Do you have a corporation? Do you not? Do you need one? When would you need one? We then add you into, actually right now, November 15th, all of our clients are going to receive an automatic message that says, book your compensation planning call. And that is something we do at year end with all of our corporate owners, because we need to figure out how are we going to get them paid. Are we going to give them salary? Are we going to give them dividends, etc.? So if you're going to onboard with Finngo, there are multiple steps that we do internally, and we create this schedule and this roadmap that basically tells us what needs to happen at what point in time. So I would recommend, if you feel a little overwhelmed or you don't know what's going on, give us a call. We'll put you in that system and in that workflow, so then things don't get missed. We deal with this all the time, and we know what are the key important things. So we will just make sure that you're included in them.
I said it like I was being considerate of the people in the back of the room, but I know, because I'm typically that person in the back of the room.
Absolutely.
That is, and as outspoken as I am and as confident as I am, sometimes just I have a hard time putting my hand out at me, and it's like, I don't understand what the heck is going on. And that's not just in bookkeeping and taxes, but it's just all aspects of life. It's if I don't understand something, in a lot of cases, a lot of times, especially because I'm an entrepreneur as well, like I have big ideas. And if you guys are those type of people that have like big ideas and you want to, you want to conquer, but you just have trouble with the micro stuff. It's the day-to-day and the actual getting it done stuff. For me personally, I'm the type of person to be like, I just need someone to show me how to do it or to do it for me. Can I just give that to you and make sure it gets done? Right? As entrepreneurs, as many real estate agents are as well, you get that, you understand that, you want to focus on that next client, that next deal, getting it closed and getting paid. It's hard to keep up with all the little stuff in between. So don't be afraid to make that phone call and just be like, hey, I don't understand what the heck is going on. Please just show me my options. I will look at how much it costs and I'll make a decision. And then I'll figure out, do I want to do this myself now that I understand it? Or do I want you to do it? The only way to know is to know. You got to ask. That's
Absolutely.
basic, right?
I know I only shared the slides with you right before this webinar started, but it is a perfect transition to what I want to talk next. And that is basically focusing on what you do best, and that is selling homes.
Mm-hmm.
We want to remove all of the unnecessary things. You should be getting your training on how to sell better. You should be networking and then actually selling. That should be your focus. Everything else you can get somebody else to do. You don't need to be a photographer. You don't need to be an accountant. You let the professionals deal with that.
Mm-hmm.
We know how to deal with your file very efficiently by taking all of the necessary steps that are required and give you the value that you deserve, while you can do the things that we cannot help you with. And we can never step in your shoes and sell those homes. So that is something that you should be focused on. And I think, Wayne, you've said it before in other things, being the CEO of your business, that
Mm-hmm.
I think is a very profound idea, because you cannot do everything. It is not possible, regardless if you're a real estate agent or you're a real estate investor. In
Mm-hmm.
both cases, it kind of applies the same way. You want to focus on what drives that business to you and how do you actually close it, and creating those systems and pipelines and processes in place. We do the same within our own company,
Yeah.
and I'll admit I'm actually not the one that does the bookkeeping work, but we have staff that do that. And why are they good? Because we have a system and a pipeline and a review process and training that they need to do, and further tests that they need to do, etc. So those are important things that we've built into our system, but you don't have the capacity or the ability to do that on your own.
Yeah, absolutely.
Wonderful. So with that said, thank you everyone for joining us today. Like I said earlier, here again is my QR code for my Linktree profile. On Linktree, I have a number of podcasts that I have done, other relevant information, and most importantly, my appointment booking link. As long as you can find that, you can find a 15-minute discovery call. It doesn't take long. We just want to put a face to a name, know what exactly is it that you're dealing with, and then start the process of incorporating you into our ecosystem and give you the value that you deserve.
Absolutely, guys. And though there's no booking any links in that QR code, book your call with Steve, please. And if you're a little bit worried, again, if you're that person, it's like, I don't know if I should or not, just send me a DM and I'll tell you anything you need to know as well. I'll make that connection with you, with Steve, and get you all set up. Or just send me a DM and be like, hey, should I do this? Should I not do this? What do you think? I have no problem taking a few minutes out of my day and helping you and to decide whether this is the best move for you or not. Or maybe you've already got an accountant already set up. You're already working with another firm and you're unsure about making that transition, how it all works. If you're nervous about it and you just need someone to talk to, just ask a quick question, send me a DM. I'd love to help you out with that. Thank you guys so much for tuning in today. We covered so much and there's so much more to cover. If you guys want more webinars like this, more free education, just send me a message, let me know, or send Steve a message. Let us know what you'd like covered, what specifically, that you'd like more about. I mean, one of the things he talked about today was, should you set up a corporation or keeping your personal? As soon as he said that, I'm like, that's a webinar. That's a webinar right there. If you guys want more of that or that particular, and specifically, just send us a message, let us know, and we'll happily put that on for you guys. Again, thank you so much, guys, and enjoy the rest of your day.